Hey YouTube, this is Leo with DripCalc, and in this video I want to make an in-depth analysis of Coinbase stock, ticker COIN. Okay, so Coinbase is the largest US crypto exchange and one of the biggest in the world. And right now we're experiencing a crypto bull run, and some of you might want to FOMO into Bitcoin or crypto stocks. And so I want to make this analysis for those of you who might be new investors or already invested in Coinbase before. And I want to look at their earnings, their EPS, their ratios, as well as predict how much money they will earn in this next quarter and going forward, and how profitable or unprofitable this company will be. Okay, so none of this is investment advice. I am just a retail investor myself, and I actually own some Coinbase stock, and I actually bought it all the way in the beginning when it just IPO'd on April 14th. And my first shares I bought at the highest price of the day for $381. I don't think it ever went that high again. But then the Coinbase stock went down to a low of $34, $33. So even 32. Okay, and I held through the highs and through the lows. And so the point here is that if you don't have the nerve to hold Coinbase stock when it drops 10% on a day, or drops 90% from the top or from your purchase price, then you probably shouldn't be investing in something like Coin, because it's very volatile. But let me explain why I invested in it at IPO in the first place and why I kept buying. And even though I bought my first shares at 308 or 381, my average is actually 204 now, and I've bought at $70 and I bought at $130, and I bought basically all the way down. So I want to show you this screenshot right here. So this is my very first buy of coin stock, 381 right here. Okay, and then on the same day, like a couple of hours later, I bought a few more shares at basically 334. Okay, so it went up to 381 and immediately collapsed. And I think the initial target price for it was 250. And I bought here, and I bought here, and I even bought here at $34. And I actually have only one share, so this is my lucky share. I'm not gonna sell it, even though I have like $223 profit on it. I'm gonna keep it just because it's my one lucky share. You know, I don't care about this. Maybe one day I will sell it, probably not. But the point is that, guys, you need to be prepared with Coinbase stock to go from near $400 down to $33. Okay, if you don't have the nerve for it, don't invest in Coinbase. Okay, with that said, first of all, why did I invest in Coinbase over here at IPO? So I've been in crypto for a little bit of time. I've actually been mining some Ethereum. I've registered on Coinbase in 2017, so long before their IPO. And basically, I've also been on Binance.com before they started Binance US, before like US regulators forced them to do .us domain. And I had like some shit coins that I was trading over there. And then as US government basically told Binance to have a separate platform for the US investors, what they did is they gave a very short window for people to withdraw their coins. And basically I missed that window, and they didn't allow you to withdraw the coins after the window has closed. And this is complete BS. Like, yeah, okay, so you don't allow people to trade, that's one thing, but then like not letting people to transfer their coins, that's complete BS. And I knew that Coinbase is the only trusted or trustworthy crypto exchange for the American investors. That was my premise. That's why I invested in it, because I knew that Coinbase will be dominating the US market, and it's actually also international. So it's used abroad, but it's dominating the US market. It's the biggest crypto exchange in the US, and it's like once we had the Bitcoin ETFs approved earlier this year in January, 8 of the 11 Bitcoin ETFs are actually using Coinbase as the custodian. And that shows the level of trust in Coinbase. And that was my premise all along. And then we had the FTX fiasco and Beckman Freud or fraud, went to jail for 25 years just recently. Now, I was never on FTX. And even when I was on Binance.com, I was just trading some shit coins on it. It was like very small, maybe a couple $100. But deep down, I knew that Coinbase is the only trusted exchange for me and for most Americans. And as more and more people get into crypto, most of them will end up on Coinbase. Not on Robinhood, on Coinbase. That's my premise. I'm going to stick with it. And yes, Robinhood is a little bit of competition for the crypto, for Coinbase, but I don't think it's that big. Anyway, and then finally later, CZ from the co-founder or founder of Binance, he's now in jail, or is going to jail because he embezzled money and he defrauded investors. So that just shows you that Coinbase, it's like highly regulated US company. So that was my whole premise in investing in it. And I knew that crypto eventually will be good. I didn't expect $32 from Coinbase. Like if like let's say I invested 10 grand over here, by the beginning of last year, I was down 90% on my investment. But I held through it. I didn't sell a single share from over here. And I actually made some other purchases at $73, $77, and whatnot. And in this account, I actually was just trading it. I bought some shares at $35 and sold at $50. I thought it will go back to 35. We never did. Now we're at 260 essentially. Okay, so let's look at Coinbase business side. Okay, so this is their EPS, and 21 was their best year so far. They were making crazy money. If we look over here, and we go per share, this is their 21 10K report, which is annual report for the 21 year, and they made a net profit of $14.50 per share. Okay, and let's say we just use a 30 multiple. Okay, so 30 times 14.50, a 30 multiple for a growth company is pretty low, and we get a price of $4.35. It actually never went that high, but the 30 PE is not a bad multiple for a growth stock. Okay, and so they made almost $15 in 21. Then they lost a bunch of money during the crypto winter, not as much as they made in the previous year, but still they kept losing money for another like 7 quarters. And finally, last quarter 4 of 23, they made $1.04 GAAP diluted net income per share, or earnings per share. And it's very interesting. So if we look on Robinhood, everybody expected Coinbase to lose 1 cent over here in quarter 4 of last year, but they made, it shows 51 cents. It's actually $1.04. This is, I believe, non-GAAP, and GAAP earnings was $1.04. And we can look over here. We once again search per share, $1.04 diluted EPS, and I believe this is GAAP. Okay, so back to over here, and I'll show you why I want to be on this page, actually on this page. Okay, so they are making pretty decent free cash flow. Over here they were making almost $4 billion free cash flow. Okay, and almost $20 a share of free cash flow per quarter. $1.06, $14, $17, $12. I'm not sure how they made $3 billion free cash flow in quarter 4 22. That's accounting gimmicks. Their stock-based compensation relative to free cash flow is fairly good. Like, let's say over here they made almost $4 billion. They only had $200 million of stock-based comp, so that's not crazy. And over here they had $430 million of stock-based comp, so that's very high, especially that they actually lost money in Q4. So you see negative income minus 246 EPS. I don't know how they reported free cash flow here. I guess like accounting gimmicks. Their cash position, it was the highest in, again, quarter 4 21, $7 billion of cash, and about half of that of debt. So 200% of cash to debt ratio. And over here they are at almost the same ratio. So their cash started going down and was like at the during this cycle between the two bull runs, it was pretty low. But now the cash pile is growing and the debt is going down. And actually last quarter, they reduced their debt by 12%. That's what their quarterly shareholder letter shows. Okay, the revenue. So after that 21 crypto bull run, the revenue was pretty flat. And I'll talk about revenue. It's very important. So at some point, Coinbase breaks even on the revenue and starts making crazy money. And basically 1 billion in revenue is that sweet spot where they break even and start earning income. So over here they made 675 and they lost a couple of million, but at 2 billion, at 1 billion they made $273 million. So we know their sweet spot where the expenses are evened out and they make net income. So there's EBITDA, free cash flow per share. It's I don't think in case of Coinbase it's actually that good of a metric because of the marketing shenanigans. Like over here they showed free cash flow positive, but negative GAAP EPS. Okay, let's look at their stock-based compensation. And over here this was the highest, and now it's really going down. So this was one of their lowest quarters, except for like a few quarters before they went IPO. So over here, I think this is prior to IPO or just at IPO. And since IPO, it's their lowest stock-based compensation quarter. So that's very nice. Over here, they had a pretty high capex, but relative to net income, it's only like 25%. And I guess they were bumping up their servers, boosting them to handle the load. But still, there was 2 or 3 times at least this year where their servers went down and there was people couldn't log in or couldn't see their crypto balances. But I guess so they need to invest a little bit more to be resilient and handle the volume. So outstanding shares, it went down over here. I'm not sure how, but it's pretty much a little bit higher than during 21. Okay, so 2-year outstanding shares growing by 2.6%. Now 1 year it's actually pretty high, 16% CAGR for 1 year, but relative to 21, it's pretty good. So now very important metric is net profit margin, guys. When they have high revenue, their profit margins are insane. Like 72% net profit margin is absolutely insane. So once they get over that 1 billion, the profit margins skyrocket. Okay, and their gross profit margin is most of the time above 80%, which is completely insane. Price to sales over here in the beginning, actually it wasn't trading over here, so it doesn't matter. It started trading over here. Price to sales about 25 to 27, so last quarter was kind of high. PE 38p last quarter. Okay, over here was, so their best quarter, the PE was 8. Okay, when they made like 14 bucks in 1 quarter per share, $14.50 per share, their PE was 8. So I'm not saying it was a good time to buy, because if we look back at the share price, it was like 225 to 50, which is about the same as right now. And then in October it went as high as 350, 360. Okay, but yeah, when there is a crypto bull run, Coinbase is making insane money. And next I want to actually talk about their what I project their next income and their next earnings will be. Okay, so the analysts estimate 50 cents per share. Okay, and last quarter they estimated a loss of 1 cent per share. So I think their this quarter, which will be reported May 2nd, so less than a month away, I think they will make like $2 a share at least. And here's my logic. Okay, so this is my analysis now. Okay, so in quarter 4 of 2021, their trading volume was 550 billion. I round up, but 547 billion trading volume. Okay, and 1.67 trillion for the year. And last quarter, if we look over here, it was 154 billion. And for the whole year of 23, it was 468 billion. So the trading volume 2 years ago was 4 times bigger, and that's why they're making crazy money. Now, I project the trading volume this quarter will be much higher than 154. And for the year, I don't know. If we get a massive recession, the crypto bull run will probably end. And so buying this stock actually highly depends on whether or not we have a crypto bull run. If Bitcoin goes to 100 grand or above, if that happens, Coinbase will be making money hand over fist. If we have like a recession and Bitcoin drops back to 20 grand, which is very possible. Like, crypto is crazy. Then we'll be losing money again, and the share price will probably dip to below $100. And like, if you think it will not, guys, yesterday Coinbase was 235, 234. Like, it doesn't show it here, but yesterday low was 234, and today it's 260 right now. So it's like 10% move in less than 2 days, and this is normal for Coin. Like, this is 1 week. Look at the crazy moves from 260 to 240 to 260 to 235 back to 260. Like, if you don't have the nerve for all this volatility, you probably should not be investing in Coinbase. And yeah, so why do I say that that Coinbase will have an amazing quarter? And basically, I sold some calls a couple of weeks ago, and I bought it back when the price dropped. I sold a call for $8, 380 strike. Sold it for $8, and then I bought it back for $1.60. Okay, because I think after earnings, the Coinbase stock will skyrocket. Now, this is my opinion. Don't use it as an investment advice, but let me show you why. Okay, so we will go to page 4 over here and look at their revenue. Okay, so institutional revenue is really small. It's less than 10%. And this is transactional. They can't even spell transactional revenue. Okay, they should talk to the guy or a gal that wrote this. Anyway, so the revenue from transactions was $530 million. Okay, now let's look at their what they call subscription and services revenue. So stablecoin, this is USDC. I have no idea how they make $170 million from USDC. Now, if we read this note over here, stablecoin revenue is derived from our arrangement with the issuer of USDC, which is a US dollar coin, which is a stable coin. Okay, so how they make 171 million in a quarter? Over here, they made $200 million from USDC. It is absolutely insane. I'm not really sure of the mechanics, but they're making money on a stablecoin. Blockchain reward. So this is staking. Guys, so as I mentioned, I got into crypto in like 2017, and the way I got into it, I was mining Ethereum, and I sold some of that Ethereum that I mined back then. I think Ether was like going from like $300 all the way to $1,400, but I kept some of that Ether. I still have it, and I am actually staking it on Coinbase, because like, why let it sit when you can earn rewards? Now, rewards on Coinbase are pretty low, and they have the highest staking fee of any other staking service. But the reason I stake with them and I lose some money over other places, because I just trust Coinbase more than I trust all the other places. Like, yes, Coinbase can screw me over. Things happen, and if you go on Coinbase subreddit, a lot of people are complaining, hey, I can't get into my account, and I don't know why. Maybe they're like scammers, maybe they like did something wrong, whatever. I've never had issue getting into my account. I had issues like verifying my account, sending the picture of my license, and you know, the technology wasn't up to par. Like, I was trying to use the camera on the computer. It wasn't basically, but it took me a while to get like verified on Coinbase, but I never had problems logging in or moving my crypto or selling or depositing or withdrawing money. And I've been there since 2017, so that's 7 years, 6-7 years. Okay, anyway, so staking, they made almost $100 million from last quarter, and this quarter I believe they'll make like 140 million, for two reasons. Number one, they take 25% of the Ether. Okay, and if we look at the Ethereum price chart, so at the end, when the quarter ended, Ether was over here, so basically 2,300. That was the highest point, and the quarter began, so December, November, October. So in the beginning of the quarter, Ether was at 1,733. So average price of Ether was like $2,000 over here, and now average price is like 3,500. So they will make, even if they collect the same amount of rewards, okay, they will make about 75% more money just from Ether staking, because average, like, yes, it was like 2,300 here in February. Okay, let's say it's $3,200. So they will make about 60% more in rewards or in staking fees. Okay, and if we look here, so 60%, I would say like $150 million they will have on staking rewards or staking. And then they have interest income. Basically, people who hold cash on the platform, they Coinbase basically buys short-term bonds with it, earns they earn interest income on the cash that you hold with them. They don't pay you any interest unless you buy USDC, but they are making a killing from USDC, so I don't know how that really works. Anyway, so the probably interest income will go up because, guys, once the ETFs were approved, yeah, the Bitcoin price went kind of down a little bit, but then like it skyrocketed from like 52 to 72 after the approval of ETFs. Anyway, other subscription, I don't know. Custodial fee. Now they're a custodian of Bitcoin for 8 out of 11 Bitcoin ETFs, and the biggest one, I believe it's BlackRock, they're with Coinbase. So their custodian fee, I don't know how much they make from custody of those ETFs, of that Bitcoin, but this will definitely improve. I would say $30 million. And I don't know what will happen with the stablecoin, but just over here alone, they'll make extra $60 million. And again, that will all go to net profit because they're already net profitable in this quarter. And trading volume, I think, will probably double in this quarter. Now, where's my table with the trading volume? It's on page 6. I think the trading volume will probably go into like 300 million or even higher. And I'm not sure how much fees they will earn from that. So trading volume by coin, I don't really know how much money they make from from that. No, I actually do. I think it's like 2.5 to 3%. So let's say 300 billion. That's 3 million. 3 billion. 300 billion times 0.03. So they'll make 9 billion. What? Nah, it's gotta be less than that. 9 billion revenue? No. Yeah, probably not. They're not gonna make 9 billion in revenue from trading fees, but they'll make a killing on the trading volume if it goes up. Like, look over here. This is the highest in the past 5 quarters, and I think it will double because now people are piling into Bitcoin, people are FOMOing. Like, I know people who've never touched crypto before. Like, this is the first time they're buying crypto. Okay, and so very interesting thing, guys, is this here. Like, not very informational, except for 52 million Americans now own crypto. Now we have like 330 million people, so this is less than 1/6 of American population. And the younger folks, they are getting into crypto, and even like middle-aged people. Like, I know a person who is like in their 50s. They bought Bitcoin. So yeah, so I think Coinbase will easily make a couple of bucks net EPS. And if we look over here, let's look at outstanding shares. So 263 million. Okay, let's say they make, just from extra staking, they will make another 60 million. Okay, so 60 million, 1, 2, 3, 4, 5, 6, divided by, what did we say here? 265 million. Okay, so 60 divided by 265. So just from staking, they will make like 23 cents. And that will go on to the net because they're already profitable this quarter. So this is half of the estimate that analysts put. 50 cents per share, the analysts say that will be their net income. Now let's go back to page 4 again. So they made 95 million from staking last quarter. And I assume that just from the appreciation of like all the coins, and I base it on Ethereum, but Ethereum is their biggest stake, and they make 25% of the reward. They take 25% of the staking reward. And so I assume just the price increase of Ethereum will add like $60 million to this number. Never mind anything else. And that's like 22.5 cents per share. That will be net at extra free cash flow. All right, guys. And I believe once we are in a full bull run, like once this goes to like 500 million per quarter, we will be making like $5-6 per quarter again. And based on that, so let's say $5. Let's say $4 per quarter times 4. So that's basically $16 per year if we have a sustained bull run, times 30, $480 share price. Will we get to 480? I mean, Coinbase is a crazy stock, and it is possible. So that's why I set when I sell a call, I set my calls very far out of the money and very short term, so they would expire fast, and I would not be assigned on my shares. I don't want to be assigned below 381, which was my initial purchase, because technically that will give me like a long-term loss, and I don't want to have a long-term loss. I don't want to deal with that. I just want to have long-term profit, pay my taxes on it and whatnot, and all is good. Now, this is not a super deep analysis of their future quarter. Like, I'm not an analyst, but this is just my understanding of the business and how they will do, in my opinion. And by the way, guys, over here in 21, the average price of Bitcoin was below $50 grand, and right now it's at 70. so yeah, I think once the trading volume goes up, once the revenue goes up, we'll probably have like this quarter, we'll probably have $1.5 billion of revenue. And so anything about like 750, because their total expenses are about 750. Like, look over here, or even like below 700. So once we cross 700 million in revenue, the expenses are covered, and it's pretty much free cash flow and net profit for us. All right. So another thing I want to compare, like Robinhood. So Robinhood is a decent stock, and so this is our stock comparison tool. And you can set different years, but because both of these stocks are pretty new, like Coinbase is going to be exactly 3 years old in 3 days. Okay, it IPO'd on April 14 of 21, and now it's April 11 of 24. So exactly 3 years ago minus 3 days. Okay, Robinhood is even newer. When it IPO'd, it was like in the summer. Yeah, like August over here. July 30th was the IPO, give or take. Now, for the longest time, so we have here a total return chart. Now, it actually with DRIP, with dividend reinvestment, but because both of these companies, neither of them is paying dividends, so this is purely price return. Now, if you invested 10 grand into either of these companies at the beginning of time, you would be up 10%, or 2.7 years ago, so when Hood IPO'd. Okay, you would be up 10% on Coinbase and minus 46% on Robinhood. Okay, and I actually bought Robinhood at like $38, and 5 days later it shot up to $80, and I was like delivering a package to UPS, and I saw that on my phone. I'm like immediately put in a sell order. So I sold 200 shares. I bought them for 38 and I sold them for 80. And then like 5 minutes later I sold the cover call on the rest, on my, like, I bought 300 shares of Hood. I sold the covered call for like, I believe in $18 a share. And then the price immediately collapsed. Okay, back to 40. Like within 2 months, within a month, it was like down to, let's look at the price chart. So it opened at 38. It wasn't 35, it was 38. And a month later, or a couple months later, it was basically its IPO price. And it went down for the longest time. Now, if you watch Amit, he is a big bull on Robinhood. And I actually agree with him. Robinhood is a great business, but you had to buy it over here. Okay, like when it was bouncing between like $6 and $10 for like a couple of years too. But now it's like $20, almost 20. It went up to 20 a few days ago. Now it's 18.50. Okay, if we compare these two stocks, now these dividends, so Robinhood is probably paying dividends. It's very weird. No, they're not paying. So why does free cash flow to dividends shows? That's weird. They're not paying dividends. I know SoFi, my system reports that SoFi is paying dividends, and in fact they do, because they pay dividends on preferred restricted stock, like 40 million a year, 40.5 million a year. And so my system shows that because my data provider shows that. Okay, but why they okay, so this is weird. So yeah, I guess dividend is, Hood is also paying dividend to their preferred shareholders, and that's why you see this number here, but they don't really pay dividends, so you can ignore that. So when we compare these two companies, the EPS for Robinhood, I think this is the first quarter they actually cash positive, except for like before IPO. This doesn't really count. 11 cents EPS, because that was before IPO. This was unaudited. And here they were losing money, but they lost less and less and less, and finally they're profitable. And that's why the stock went up from like $8 6 months ago to $20 a couple days ago. Okay. They show free cash flow, which is nice. I have 38 shares of Hood. Or 33 shares. Yeah, 38 shares. And my average is like $9. Whatever. I sold my position. Actually, like, I sold that call for $18, and then it never was assigned because the price dropped, and I sold it like $8 a year later. So I lost like $30 on those shares, but because I sold 200 shares at $80, I still made money overall. But yeah, I only have 38 shares that I bought during the crypto winter, and basically in 22. Doesn't matter. So let's go back to comparing these two companies. Now, why I still think that Coinbase is better as far as crypto? Because most of the business for Robinhood is trading stocks, and now I'm not saying Robinhood is a bad business. I just don't think their crypto revenue is that big, and it will be a huge challenge for Coinbase. Okay, because Coinbase makes money on other things, like on staking they make crap ton of money, on trading, on USDC they make a crap ton of money, and on being custodian for all the ETFs and whatnot. So revenue, you see 400 million, like they never went above 565. Now Coinbase went to 2.5 billion during their best quarter, and net income was, well, I guess they were spending a lot of money on something here, because net income was only 840 million. So I'm not sure, but last quarter our expenses were about 600 million or 700 million, even less, and after those expenses it's net profit. So I guess they fixed up the expenses part, reduced their everything. And cash position, Robinhood has a lot more cash and basically no debt. So 7 billion of care. I'm not sure. No, we don't show the market cap of Robinhood here, so let's quickly look at it. Market cap 16. So 10 billion actual like company value, and the rest is cash. It's a pretty sweet deal. So basically out of $19, about 11 is the value of the company, and the rest is cash. Very nice. Even at some point they were trading at basically like net cash. At some billion, when they were at like $8-9, basically they had enough cash to buy all their shares. This is insane. Yeah, so let's go back to compare to, and so revenue for Robinhood is actually increasing nicely overall. So here during the meme stock craze they had the best revenues, then it dropped like really hard to 300 million. Now it's growing. There is no trend because it's such a new company. Same for Coinbase, there is no trend except for crypto bull runs. So, but overall I think in the crypto space, yeah, okay, you see, so stock-based comp, Coinbase had a lot of stock-based comp. That's why, like $430 million of stock-based comp. That's insane. That's more than they made in net income last quarter. Okay, and Robinhood on the other hand is really like they're down all the way down to like 81 million. So that's good. Capex, actually no, Robinhood is tremendously reduced their capex. So they already built out their system, and now only 6 million in capex. And they're purchasing shares. They're not diluting people anymore. That's interesting. I gotta make sure these are the correct numbers, because sometimes our data supplier mixes up things. But anyway, yeah, Coinbase is still diluting, which is not great. And you can see Hood is much less, like a lot less profitable overall. And even on the best day, it's only like 6% net profit. Over here, 10% net profit margin, and Coinbase is like 72% net profit margin when we have high trading volume. Yeah, I think we need to fix this. I guess my data was incorrect, so we'll fix that. But you can see where the correct data is. Net profit margin was, gross profit margin 51%. Not bad, but like nowhere near Coinbase. Yeah. All right, guys. So thanks for watching. If you enjoyed this long format, please let me know in the comment section below. If you have any questions, or let me know your opinion about Coinbase stock, what you think, how much they will earn this coming quarter. And please like this video if you enjoyed it, subscribe to the channel, and I will see you in the next video. Thanks for watching.